Good day and welcome to the CG Power and Industrial Solutions Q4 FY2023 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participants' lines will be in a listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Ms. Bhumika Nair from DAM Capital. Thank you and over to you, Ms. Nair.
Yeah, thanks. Good evening, everyone. And on behalf of DAM Capital, I would like to welcome you to the Q4 FY23 earnings call of CG Power and Industrial Solutions. We have the senior management today being represented by Mr. N. Srinivasan, Managing Director, Mr. Sushil Todi, CFO, Mr. Ramesh Kumar, President, Industrial Division, Mr. Mukul Srivastava, President, Power Systems, and Mr. Ranjan Singh, Executive Vice President, Railways. I'll now hand over the floor to Mr. Srinivasan for his initial remarks, post which we'll open up the floor for Q&A. Over to you, sir.
Thank you, Bhumika. Good afternoon, ladies and gentlemen. Let me first extend a warm welcome to you all for this Q4 and FY23 annual earnings call. I am Natarajan Srinivasan, Managing Director of the company. I would like to introduce my colleagues who are with me on this call. Ramesh Kumar, President, Industrial Division. Mukul Srivastava, President, Power Systems. He's on the call. Ranjan Singh, Railways, Head of Railways Business. Sushil Todi, CFO of the company. The company performance. Standalone I will be covering both FY 2022-2023 as well as Q4 FY 2022-2023. Standalone revenue and PBT before exceptional items recorded in FY 2022-2023 is the highest in last 11 years. All the businesses grew significantly over the last year with good margins. Order book on hand as on 31st March 2023 aggregate to 4,319 crores. Q4 performance. Aggregate sales for the quarter were higher at 1,788 crores, recording a growth of 27% year-on-year and 9% quarter-on-quarter. Profit before tax was at 252 crores, 14.1% of sales in Q4 of FY23 as against 131 crores, 9.3% of sales in Q4 of FY22. 274 crores, 16.6% of sales in Q3 of FY23. Margins were higher year-on-year on account of volume growth, softening input costs and procurement efficiencies. Free cash flow generated for the quarter was 263 crores. Order intake for Q4 of FY23 was 2,073 crores and unexecuted order book as on 31st March 2023 of 4,319 crores. This represents about 22% growth year-on-year. FY23 performance. Aggregate sales for the year were higher at 6,580 crores, recording a growth of 28% year-on-year. Profit before tax was 927 crores in FY23 as against 502 crores in FY22. Margins were higher year-on-year on account of volume growth, higher sales realization, procurement efficiencies and higher other income. ROCE for FY23 was 47% against 34% in FY22. Free cash flow generated for the year was 749 crores. Order intake for FY23 was 7,828 crores. Q4 performance. Industrial Systems Q4 performance. Aggregate sales for the quarter were higher at 1,196 crores, recording a growth of 25% year-on-year and 3% quarter-on-quarter. Profit before interest and tax was at rupees 188 crores in Q4 FY23 as against 135 crores in Q4 of FY22 and 230 crores in Q3 of FY23. Margins were higher year-on-year on account of higher volumes, softening input costs and procurement efficiencies. Sequentially, margins were lower due to product mix, execution of home purchase orders and higher input costs. Order intake for Q4 FY23 was 1,436 crores and unexecuted order book as on March 2023 was 2,040 crores. FY23 performance. Aggregate sales for the year were higher at 4,558 crores, recording a growth of 25% year-on-year. Profit before interest and tax was at 748 crores in FY23 as against 464 crores in FY22. Margins were higher year-on-year on account of higher volumes, better price realization, softening input costs, and procurement efficiencies. Order intake for FY23 was 4,963 crores. Power Systems Q4 performance. Aggregate sales for the quarter were higher at 593 crores, recording a growth of 32% year-on-year and 23% quarter-on-quarter. Profit before interest and tax was at 75 crores in Q4 of FY23 as against 27 crores in Q4 FY22 and 57 crores in Q3 of FY23. Margins were significantly higher year-on-year on account of higher volumes and favorable product mix. Further, there are one-time warranty provisions in Q4 of FY22. Order intake for Q4 of FY23 was 637 crores and unexecuted order book as on 31st March 2023 was 2,279 crores, 46% higher year-on-year. FY23 performance. Aggregate sales for the year were higher at 2,023 crores, recording a growth of 33% year-on-year. Profit before interest and tax was 227 crores in FY23 as against 145 crores in FY22. Margins were higher year-on-year on account of higher volumes, softening input costs, and procurement efficiencies. Order intake for FY23 was 2,865 crores, representing a 33% growth year-on-year. Consolidated results. Consolidated results include the performance of operating subsidiaries at Sweden, Germany, and Netherlands, namely Drives and Automation in Europe, and other non-operating holding subsidiaries. The company has decided to divest its investment in a wholly owned subsidiary, QEI LLC in USA, and has engaged a third party to find a suitable buyer and presently expects to complete the divestment in the year 2023-24. In accordance with India's 105, non-current assets held for sale and discontinued operations, the operations of the subsidiary, including its assets, liabilities, and net results, are disclosed as discontinuing operations. Q4 performance. Aggregate sales for the quarter were higher at 1,903 crores, recording a growth of 28% year-on-year, 9% quarter-on-quarter. Profit before tax was at 262 crores in Q4 of FY23 as against 135 crores in Q4 of FY22 and 285 crores in Q3 of FY23. Unexecuted order books of Drives and Automation Europe as on March 31st, 2023 was 138 crores. FY23 performance. Aggregate sales for the year were higher at 6,973 crores, recording a growth of 27% year-on-year. Profit before tax was at 950 crores in FY23 as against 504 crores in FY22. Summary. In FY22-23, FY2022-23 was another record-breaking year, and the company built on its strengths and delivered across financial and operational parameters. Several landmarks were achieved by the business: highest ever sales by motor division, highest ever sales by railway division, highest ever order booking for transformer division. The company also during the year declared and paid interim dividends after a gap of 7 years. The company prepaid all its remaining term loan of 100 crores and redeemed the non-NCDs outstanding and has become debt-free. The Board of Directors also approved a proposal to expand the manufacturing capacity of motors at its plants at Ahmedabad and Goa at an outlay at Ahmednagar and Goa at an outlay of 230 crores, and for transformers at its plant in Bhopal and Malanpur an investment of 126 crores. India Ratings have upgraded the company's long-term rating to AA and also the short-term rating to A1+. Between myself and my colleagues, we'll be happy to answer any questions. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. We request the participants to restrict questions to 2 per participant. If you still have more questions, please join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask question, please press star 1 now. Take our first question from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. The first question, if you can throw some, of your comment on the order intake, because when we met at the analyst meet, which you conducted, you talked about order intake continues to be strong, broad-based recovery is there, but when we look at print, it's about just only 8% growth in order intake. So if you can throw some light, and some orders didn't get finalized, that's my first question. Then I'll come to the second question.
No, order book actually, compared to what it was last year, this is quite substantially higher. In fact, given the numbers, for power division, actually the growth is about 46%. The railways, actually what happened, the order book would have been much higher. Some of the tenders which have to be finalized in March got postponed to the current quarter, so they will be made up in April, May. See, motors actually, it is orders get replenished month on month. So overall, I think the order book position is comfortable.
Got it. And so generally on the industrial and talking about the profitability on both segments, one segment you have said that commodity softened and it helped the margins. On the other segment, you said commodity went up. Can you throw some light, in terms of profitability, what's the outlook on both the segments in terms of margin?
So if you analyze the last 1 year performance quarter on quarter, if you see first quarter margins would have been lower actually. So I think the commodity, there are a number of aspects. See, one is commodity prices prevailing at that point of time. Commodity prices at which we purchase, and then commodity prices, those when we charge it off to consumption, when we are using it, all these things are matters. Therefore, so overall commodity, the fact remains that commodity prices went yo-yo. Even now, current year actually, if you see last few days, the price of copper has been going up and down. So therefore, there is no conflict or contradiction in whatever we have mentioned. The quarters in which the prices were higher, we have stated so. At the end of in Q3, actually, margins really were quite high, even in those calls I have mentioned, because the prices, whatever prices we booked, the software prices at which booked, they got charged to consumption. It also because if it coincides that some of the high-priced orders that we have booked earlier got realized in those months, then it adds both ways to your advantage. I hope I have made myself clear.
I got it. And so lastly, on the warranty provision, if you can throw why it was taken, because we thought everything we are covering in terms of provision, and what is the overall exposure as a firm price contracts in the overall order book? Those are my last question. Thank you.
So it will not be possible for us to, or we don't want to share how much is on account of orders which are covered by price variation, which are not covered by price variation. So warranty actually it is an estimate. When we feel we are a conservative company, we always would like to be conservative in our provisioning. When we feel that it is really required to provide some more for warranty provision, then we provide. So that is the basis on which we take a call.
And you have to also note that this provision was made in last year, that is in the FY2021-2022, not in this current year.
Good. Thank you.
Thank you. We take a next question from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah. Good evening, sir. So my two questions. The first is, sir, what would be the growth attributable to price, and what would be attributable to quantity, especially for FY23 numbers? So in broad flavor, yeah.
No, we have three businesses. I don't know whether you're asking for the company or for any one of the business. It will not be possible to state for the company as whole. Each business, each products are different.
Is this for industry? Yeah.
We don't share this detail.
Okay, understood. Second question on the industrial motors market, sir. If you can highlight what is the kind of growth expectation going forward, maybe you can split it also in terms of low tension, high tension motor, and what are the market share in FY23 if you have?
Yeah, in LT motor we have market share of 35%. That is as per the EMA declared till January. And for HT motors, we have 14.5%. This is also as per EMA data declared up to January. This is FY23. So growth for future?
For this year, current year.
For this year, FY24, sir?
Current year, see, almost all the segments are growing. Only steel was last year was very bad. Otherwise, water, wastewater, and infrastructure, pharma was flat, but ethanol, sugar was growing very well. So last year and this year also it continues to grow this.
And lastly, sir, do you expect the railways tender will improve in the coming quarters? As you said that something got postponed, it does happen in Q4 FY23. Is the right understanding?
Ranjan?
Pardon me? Can you repeat it?
Sir, on the railways, you mentioned that some of the tenders got postponed from FY23. Yeah. We expect it to happen in Q1, Q2 FY24, and we expect the railways to be much, much stronger compared to FY23.
Yeah. In terms of the order book, it will be better when the orders will be finalized in the Q1, Q2.
What is the growth expectation, sir, we are looking at?
Growth expectation of the business during the year?
Railway, sir, yeah.
We don't provide the details.
So we don't give a separate disclosure about this, but if you look at that March, some of the tenders got postponed in the first week of April, and we were awarded around some very high value of amount of the order in the first week of April. But we can't disclose a separate number for the railway, but probably when we discuss in the analyst call, this is what we can tell you.
Understood, sir. Thank you and all the best, sir. Thank you.
Thank you. We take a next question from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Thank you. Congratulations for great set of numbers. So I have two questions, both pertaining to the industrial segment. If you could help us about the competitive landscape on both LT, HT motors, because we understand while incumbent like yours and ABB are almost doubling, but we see some of the recent entrants like TME, IC, WEG, etc. also setting up significant capacities. So just help us understand about the competitive landscape. That's one. Second is on the railways front, if you can help us understand how does the changing landscape of the incremental growth shifting towards the 9,000 horsepower and 12,000 horsepower locos impact or benefit CG?
Yeah. See, obviously, as you rightly said, WEG and these people are putting up the capacities. It is not just for the Indian market. I know today worldwide people are looking at Indian market, so people are shifting. Whether it is ABB, I don't know if ABB doubling. Definitely not in LT motor or HT motor. They are maybe doubling overall their rotating business, which includes the automation. So definitely the capacities are putting up by the people. And as of now, if you see, the number 2 is half of our turnover. So catching up time will take. And we are also, as Mr. Srinivasan has said, that we are also planning for a capacity expansion. Hope I answered your question.
Sure. So if you could help us, how does this impact the margins? Because today you're running almost at near optimal utilization. As these capacities come up, does this impact profitability?
See, these industrial products, mostly LT motors and fractional horsepower motors, these are all commodity, okay, except for the time lag for passing on the material cost to the market. That will take about 2 to 3 months. Otherwise, it is realized when the material cost goes up, and also it will be passed on when the material cost goes down. So it will not have any impact as far as profits are concerned.
So then the next question.
Yeah. The next part you had asked is if the competitive landscape is changing due to the change in procurement methods of railway. This is on a PPP type module where the companies would be asked to manufacture the locomotives in the railway premises. One of the tenders is out, that is of 9,000 HP, which Siemens has got. 12,000 HP is still postponed till August, and we still don't know when it's going to be finalized. The supplies would start to happen after 2 years. Till such time, we see a distinct continuity of policy of Indian Railways for manufacture of the current 6,000 HP locomotives, and we do not see too much of a change in terms of our outlook for the next year.
Sure. Thank you so much for taking my questions.
Thank you. We'll take the next question from the line of Alok Ranjan from IIFL AMC. Please go ahead.
Yeah, thank you for taking my question. So my first question is related to industrial segment, where our order book has kind of remained flattish, 2 to 4% growth in order book and order inflow. So is this a reflective of the system level ordering in that segment, or does this indicate the capacity higher capacity utilization that we have in this segment, and that's why we are not able to take the order inflow that we can?
Generally, if you have seen, the volatility of the commodity happens too much. At that time, we also be very cautious in taking the orders, as well as the channel partners. Stocking also will be very cautious. So that is the reason it is shown as flat or maybe a small growth.
And given this backdrop, sir, how should we think about the growth in this segment, industrial segment?
So first of all, we don't give any guidance about the growth. I don't think so we are disclosing about the growth, but yes, we always saying about the double digit on a higher side.
And sectors are growing. All the sectors are growing, so investments are good. So we are hoping that things will be better.
Perfect. And the second question is on clarification. The note that you have posted in terms of divestment, the investment in wholly owned subsidiary, QEI LLC. So could you just help me understand? This is a wholly owned subsidiary of CG Power America, and we are divesting this step down subsidiary. The line item that we have mentioned in the P&L, is that the reflective of the fair value and the difference in the net book value, which is there as on March 23?
No, it is not reflecting that. It is just simply the performance of that entity.
Okay, got it. And whether we should expect any indirect impact of this divestment on India operations because of the selling of that entity, sir?
No, we don't see any impact.
Got it. That's all from my side. Thank you.
Thank you. Ladies and gentlemen, kindly restrict questions to 2 per participant. We have next question from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Yeah, good evening, gentlemen. Firstly, congratulations, on the strong overall performance and for the strengthening of the balance sheet. Could you indicate, the strong order book that you've got? How much of that comes from the international orders, if any, in the order backlog?
International?
Yes, sir.
How much of the will not be significant. Mostly all domestic orders only. Because you see, railways is 10%. Generally, it's domestic, barring very small portion for exports of some railways, etc. The motors also substantially domestic. So, I'm not putting a number. You can say substantially they are all domestic.
Because I think in the third quarter this number was around 146 crore rupees. So that's why I was just trying to see whether there has been improved traction from the international market or more flattish.
So I think if you want, we have to just compute and then let you know. But we can go by my word that substantially all domestic orders.
So it is in industrial, there are mainly domestic orders. In power, we do that bit export, which is usually around 10% of the order book. You can take it.
Okay, fair. So my second question is on, is it possible you can share the order intake of the fourth quarter of last year? And also connected with that, we've seen a significant increase in the unallocable unallocations in the segmental performance. So if you can comment on that also. Thank you.
So the last year quarter 4 number, you need the order intake number, right?
That's right.
That I think we can give to you separately. So
you can take this up offline, so we'll be able to share it.
And with respect to unallocable expenses, are you talking about?
Yes.
So I don't think so any increase in that number, because last quarter we had that our interest reversal with regard to the NCD. So that is was around 18-19 crore. That is why it was minus in the last year. So this year there is no such other income. So that is why it is coming positive.
Okay. Right, sir. Thank you very much. I'll come back in the queue.
Thank you. Take the next question from the line of Renu Baid from IIFL Securities. Please go ahead.
Yeah. Hi. Good evening and congratulations, sir. If you look, last 2 years and the CG's journey has been pretty phenomenal in terms of turnaround and coming back on the growth trail. So strategically, from here on, what are the top 3 or 4 areas of focus for the management, say for fiscal 24-25? And we have outlined capex of about 350 crores, despite having a cash chest of 700 crores and generating almost a similar FCF annually. So how do you plan to leverage the balance sheet to drive the next leg of growth?
So just to be brief, motors, if you ask me, we have announced expansion to double the capacity. So therefore, we would really focus on, apart from domestic market, we want to focus on exports. We also would like to look at some large MNC orders based on who are looking to source from India and based on China Plus One strategy. Then we want to get into manufacture of motors for electric vehicles. So these are the 3 or 4 directionally we want to work on with respect to motors. Then if you look at power, the domestic demand is very strong. We have been studying the business both in terms of top line as well as bottom line. Doing this business carefully with a focus on margins. And then there also we have announced some expansion, which is not a great capacity. It will take up our turnover by another 1,000 crores. If there are any opportunities, we are looking at to further expand the transformer capacity. Here, the idea will be to position yourself to cater to the domestic demand, which is, in my view, which is expected to grow at least for the next 4 to 5 years. And as far as railways is concerned, we have always been a product company. We are trying to fill the gaps in technology. For example, we are strong in propulsion. There are certain areas in propulsion where we have gaps. We are trying to source technology for that. We also would like to see how we can, if not directly, first is will be to participate with other people in a consortium approach for the large tenders which are coming, project orders. If that is not possible, then whoever is got the orders, whether we can work for them in a subcontracting manner. So internally, we are positioning ourselves equipping ourselves with respect to acquisition of technology and then skill gaps, etc. So all the 3 businesses have got good opportunities for growth. So this is how we are trying to step the efforts to increase our growth.
Got it. Any updates on the EV side or still WIP and we need to see, will take some more time?
WIP only, so it will take some time.
Got it. So secondly, last year we had started on this journey of operational excellence, lean manufacturing, factory productivity related initiatives. So where are we with respect to this journey? Are the benefits now fully accrued in the P&L, or we think there could be some more headway in terms of the operating margins from these initiatives for fiscal 24?
So this journey has no destination. It will keep on going. There is no destination. We can't say we have completed everything and then we are finished. Of course, the major initiative which we are starting, which will still continue for at least for 1 more year. Thereafter, whatever we have learned, we will continue to apply and operate. And some of the margins which we are seeing, higher margins, at least a certain portion is attributable to all these gains, whether it's on account of operational excellence, lean, then productivity increase, etc. It's certainly on account of this. So this will continue.
And got it. Also adding our capacity without incurring much capex, so that is also helping us.
Sure. And one last question, if I can ask, would it be possible for you to briefly share how was the product category-wise growth number, say transformers, switchgears, motors, railway, and the consumer portfolio?
No, we cannot.
Just the growth rate. Oh, that should not be a problem. Thanks much and all the best, sir.
Thank you.
Thank you. We take a next question from the line of Harshit Patel from Equirus Securities. Please go ahead.
Hi, thank you very much for the opportunity, sir. Sir, my first question on our capex plan. Apart from motors and the transformers capex that we have announced, in the first quarter you had also spoken about doing some debottlenecking to release some 15 to 20% of the capacities at a capex of almost 230 crores. But sir, while we see our overall capex numbers for FY23, that number seems very weak vis-a-vis that guidance. So could you please explain the gap in that?
No, gap is, it is taking time to implement the capex. We have taken more time because we want to optimize little further, or because we want to combine it with in some cases with the expansion proposals so that overall economics will be better. So that's it actually. It's nothing. We have not withdrawn any capex. There might be, in terms of timing, the best way of doing it instead of today, maybe instead of tomorrow, along with other capex, etc. Each SBU is taking their own decision, so it will happen.
Right, understood. Sir, my second question is on the railways front. Could you give us our FY23 sales order and order book for the railways business?
We are not providing the same in details because there are segments which is served by power segment as well as in industry. So normally we are not providing the breakup of railways as a for this order intake and backlog.
No problem, sir. So just lastly, sir, when I look at our overall liabilities front, the discontinued and the liabilities for the discontinued operations is almost 714 crores. So could you explain why this number is so high? Anything you think that we'll have to pay in the future? So is this 714 crore entirely pertaining to this QUI LLC that we are going to divest?
No, it is relating to many other government subsidiaries, right? So those subsidiaries are under voluntary liquidations or are under at NCLT levels. So as of now, we do not see any liabilities are payable against that 714.
Okay, understood. Thank you very much for answering.
And we can share the numbers for railway if you want. For the full year, it's 1120 crores for the railway.
But that is part of the industry.
Yeah, no. It is for the 22-23. So it's a part of the industrial systems. Okay. And our order book remains at around, including that the order which we got it in the first week of April, it comes to around 970 crore.
Okay, so this is 970 crore are total orders or the outstanding order book?
Outstanding orders, so order book position.
Order book position. Okay, so this entire thing pertains to only industrial systems, right? And power systems would be on top of this.
Yes, this is only we talked about the railway orders.
The total order book on the unexecuted order book we have mentioned.
That is 4,400 crore, na?
Yeah, 4,319. It will be mentioned in our press release.
Yes.
One please.
Okay, sure sir, understood. That would be all from my part. Thank you.
Thank you. Participants who wishes to ask a question at this time, press star and 1 on their touchtone phone now. Take our next question from the line of Dhawan Shah from Alpha Accurate Advisors. Please go ahead.
Yeah, thanks for the opportunity, sir. So I have a question on the capacity utilization for the LT and HT motor. So you highlighted roughly 80 to 85% of utilization last quarter. So what was the number at the end of Q4?
It's almost similar.
It remains the same.
Okay, so on quarter-on-quarter basis, we have seen, the growth. So is that roughly driven by the realization growth. Is that the fair assumption?
Volume and price both.
Volume and price and also product mix.
Okay. Fine, sir. Fine. Yeah, that's all from me. Thank you.
Thank you. We take a next question from the line of Dhiren Merchant from Aurora Limited. Please go ahead. Dhiren Merchant, your line is unmuted. Please go ahead and ask your question. If you have muted yourself on your device, please unmute and ask your question. Mr. Dhiren Merchant. As there's no response from Mr. Merchant's line, we move on to the next question. The next question is from the line of Avilasha Satale from Quantum AMC. Please go ahead.
Yeah, thank you for giving me opportunity and congratulations for the good set of numbers. So my question is regarding the power segment. We have seen around 33% increase in the order intake for this segment. So and even order book remains strong. So what has driven this kind of increase in the overall orders? How is the outlook for the current year? And what is your average execution period for the same?
So one is the reasons for the increase is actually purely investments that are being made in the energy sector. The power sector is witnessing a lot of investments. So therefore, as a result, demand for our products gaining momentum. I think, as I said earlier, the demand will continue to be strong. What is here? What is the third question?
So average execution period.
See, it depends on the product, no? So some can be executed in 3 months, some can be in 7 months. Depends on the type of product. We cannot generally say one time period.
Okay, fine.
Yeah.
Thank you. We take a next question from the line of Mayank Chaturvedi from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity, sir. So just wanted a clarification on the railways number that you alluded to. So you said railways business as a whole achieved a sale of 1,120 crores, or is it only from the industrial system segment?
It's 1,120 crores out of the industrial segment. If
Okay.
that's more, it would be a bit more.
So in the last quarter, you said that it would be an 80 crore revenue run rate from the power system. So would it be closer to that number?
Yes, right.
Okay. And so what will be the order inflow for the railways business for FY23?
FY23 order intake was 1,113 crores.
So this is only from the industrial systems business?
Yeah.
Okay. And this does not include the order that we received in the first week of April, right?
Yeah. Balance was received in the first week of April.
Okay. And what will be the orders that we received in the power system segment?
No, the order that we have received this year?
In railways...
No. In FY23, sir.
In FY23, in railway segment?
Yes, sir. Yes.
It should be in the range of, I think, 200 odd crores.
So 1130 plus 200, right? For the railways business.
So we said sales was 1,123 and crores would be the sale that has happened extra from the power side.
Okay. Thank you so much. That will be all from me.
Thank you. Anyone who wishes to ask a question at this time, press star and 1 on your touchtone phone now. Take a next question from the line of Sanjay Kumar from iThought PMS. Please go ahead.
Hi, sir. Just wanted to understand the end user or the application for the transformer capex that we are putting up. That would be the first question. So, in the for the previous quarter, you had released a presentation where you had mentioned the drivers for power segment. One was the TBCB projects or the transmission for 300 gigawatt renewable energy. That should be roughly a 20,000 crore opportunity, right? Just the transformers piece for transmission of 300 gigawatts.
I'm not able to understand your question. Anyway, I will ask Mr. Mukul, our business head, to answer if he has understood your question.
Oh, same here. Can you please repeat your question?
So for transmission of 300 gigawatts, Ministry of Power came out with a detailed report mentioning the transmission capacity needed, and you had also quoted that TBCB projects worth 2 lakh crores is expected in the next 5 years. Of this 2 lakh crores, what will be the transformer opportunity?
Transformer opportunity will be close to around 10% of that.
Okay, that's what I mentioned. So 20,000 crores. But all of this should be 400 kV, 765 kV, right? But we are putting up capacity for 220 kV is what I understand at T3 Bhopal.
No, we are putting a capacity for transformer which can make 220 kV, 475 kV all transformers, because this is a way in which our winding machines are there and this can cater to all three ranges. Firstly. Second thing is, TBCB projects are also in the range of 220 kV also.
Okay, cool. And the second capex is at Malanpur. There the PPT states that the capacity addition is to 145 kV. What will be which sector will be the driver for this segment, sir? The smaller low power transformer.
See, actually, low power transformer, this is our internal classification of identifying it as low power, but actually this goes up to 50 MVA transformers up to 145 kV range. And these are largely used by the utilities within the distribution network or the transmission network of the state. So this is a large driver.
Okay. And second on motors. So I've heard that NPCIL approved us as a vendor for primary coolant pump motors. Is that true, or are we yet to be onboarded for this?
You are right. We have been approved as a second vendor.
So BHEL has been supplying or has been asked to supply so far. What will be the opportunity for us in nuclear sectors from NPCIL?
The opportunity is big because the first order which we have received for 10 numbers last year, back end of the year, and it will be at least 40 to 60 numbers tenders will likely to come in next maybe 2 years time.
40 to 60 and one motor will be approx value, sir?
I'll tell you that.
Rough range.
We can't share that,
All right. That's it from my side. Thank you. Thank you.
Thank you. We'll take the next question from the line of Vikas Srivastava from RBC Financial Services. Please go ahead.
Yeah, thank you. Just wanted to get a flavor again on the consumer product. If you could I know you won't give any forecast, but when do we expect this to get into our segmental reporting, turnover crossing 5%, and a general outlook for the next 2-3 years in terms of how material or substantial can it become for the overall CG business? Whatever the best you can share, and what are the regions we have introduced our products, or whatever is there in the public domain in terms of introduction of consumer products and how it's been received in the market.
See, the purpose of launching this is CG is a well-known brand and well-known brand in not only in industry, in the household also, known household brand. So that is the reason. And we know this business very well, and we had the channel partners who were doing this business earlier. So that is the reason we have launched, and we have. We can't give you the exact numbers, but we have done significantly well in last year for 2 products which we have launched, the pumps and the fans, and maybe we will be adding some more products, expansion of these product range, and we have a big plans for this business going forward.
Thank you. Participants who wishes to ask a question may press star and 1 on your touchtone phone now. We take a next question from the line of Manish Dhariwal from Fiducia Capital Advisors. Please go ahead. Mr. Manish Dhariwal.
Thank you for this opportunity. Sir, as you rightly noted, that company is a very, very strong brand and is also very accepted, is one of the most acceptable brands even in the households. And you have tried to grab the opportunity. So you must have obviously observed that the consumer side of the business, which was earlier held by some private equity players, that they are undergoing huge problems. And the management of your company have also stated that you have a very strong, inorganic acquisition appetite as well. So, given these kind of market scenarios, can you throw some light on how your growth aspirations will be met by, say, inorganic ways?
Met by?
By inorganic, by maybe acquisition or some sort of some acquisitions.
No, so I think one thing, as a philosophy, every inorganic or organic opportunity we evaluate. If it makes commercial sense, we go ahead. That is the simple logic. Even CG itself for Murugappa was an acquired opportunity. So
exactly.
I don't know whether I have answered your question. We have to evaluate if it makes commercial sense, and if there is an opportunity, we can pursue that.
Right, sir. So, sir, second question would be, on a little strategic perspective of maybe about a 3 to 5 year outlook. So basically, your case study in how a turnaround can be done in a successful manner, and I think all the losses that the organization had undergone because of its wrong management practices have been kind of recovered. Now, so sir, I guess in some level it was the low-hanging fruit. Now, so going ahead, sir, would be very helpful if you could share as to how you are looking at the future and what kind of share of the revenue can be contributed by the new initiatives, say over a period of 5 years. So I'm not looking at a short-term thing. So we are long-term investors. So we would like to understand.
So this is actually a Q4 earnings call. So you are asking me to answer some questions for next.
No, sir, but this is the only opportunity you give us, no, to connect with you.
I know I have some time back I've answered a question. What are all the growth areas? How are you looking at it? Etc. Business by business, what we are trying to do is, I said, at this point of time, we are not doing anything new. We are only trying to consolidate and strengthen our core. We want to consolidate our industrial systems, railways, and power systems. In all the businesses, there are good opportunities. First initial attempt was to regain the market share which we lost, which we have done. So now we are trying to see how we can consolidate and strengthen our position. If there are no opportunities here, we should look for immediately. So this is what we are doing at this point of time.
Thank you, sir. Thank you so much. Thank you, sir, and all the best, sir.
Thank you. A reminder to participants, if you wish to ask any question at this time, please press star followed by 1 on your touchtone phone now. We take a next question from the line of Mayank Chaturvedi from Equirus Securities. Please go ahead.
Yeah, thank you for the opportunity again, sir. I just had a question on the motors business. So with the softening commodity prices, have we passed on that price benefits to our dealer network?
Yeah, I told you that there will be a time lag. When the price goes up, recovering will take about 2 to 3 months time. And obviously, when the price goes down drastically, so again, as I said, it is a commodity product. There is a competition, so we need to pass it on very carefully. But our realizations will be, the margins, protecting our margins, the realizing or passing on will happen.
Right. And why I asked this question is because I was going through the price list that CG Power comes out with for their dealers, and the price that's been come in effect since for April 23. What I can observe is it's 10 to 15% higher than what was in effect for FY22. or FY23. So that's why I asked this question. So is it that instead of revising down the prices, we have in fact increased our prices or something like that has happened?
In quarter four, if you see, the prices have gone up. No, copper has crossed $9,000. Even it went up to $10,000. Also has come down. So generally, the practice in the industry is that every year the price list is revised, and the discounts was what we pass it on based on the commodity price.
Okay, so all in all, the prices have been revised upwards and the discount to dealers remain the same.
Yes.
Right? So realizations must have gone upwards then. Hello?
Yeah. I think we answered your question, right? That's too much of volatility in the commodity prices. So depend on the situation, we decide everything. So I think we answered your question. So as of now, the price revisions are not there. Whatever the prices were there, those were there for the 22-23.
Okay. Thank you so much.
Thank you. We'll take a next question from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
Yeah, thank you for the follow-up opportunity. The question is on the consumer products piece. If you could help us, the market share that we would have at the exit quarter of for the pumps and the fans business, and how do we see the growth given that we are a smaller market share?
We are able to hear you.
Sir, yeah. So, Mr. Vitlani, please go and ask your question again.
Okay. So could you help? The question is on the consumer piece. Could you help us with the market share in the pumps and the fans at the exit quarter of the March? And given that you are much smaller and starting off, what's the kind of growth we see, and are we incurring losses being the initial stages?
We are not incurring losses. Growth is obviously it is multifold because we are a very small player, and as you rightly said, we are just beginners. We are at the single-digit market share as of now.
Is it possible to highlight the market share for the pumps? Is it like 7-8%?
No, not up to that level. It is little less than that. And fans is also both are below 5%.
Okay. Would it be able to share a 3-4 year perspective? What's your aspirational market share in each of these products, and the efforts we are taking to achieve that?
No, I think we have been telling that 3 to 5 years our target is around 1,000 crores in the absolute numbers.
Great. Yeah. Thank you so much for taking my question.
Thank you. We'll take a next question from the line of Alok Ranjan from IIFL AMC. Please go ahead.
Sir, just one question related to the two industrial and the power system segment. Is it possible to help me with the replacement order and the new project order, like the growth that we have in FY23, the two segments? Is it possible to give some sense like how much we generally get from the replacement demand and how much from the new project demand?
There is more of new projects only. The replacement is because, motors life is almost about 20 years. Okay. So the replacement market is generally catered by the channel partners. So we will not get to know exactly how much is going for replacement market. But to the best of our ability to estimate is about 20 to 30% is replacement. The rest of the market is for the new projects and new OEMs who manufacture the equipment.
Got it. And can we infer that, sir, in that case, for our company, the services portion will always be kind of, very low, like FY22, I think it was closer to 1%. So it will remain kind of maybe low single digit kind of.
Service revenue you are talking about?
Yes.
Yeah, generally, yes.
Got it. Thank you, sir.
Thank you. Ladies and gentlemen, we have reached the end of the question and answer session. And I'd now like to turn the conference back over to Ms. Bhumika Nair from DAM Capital for closing comments. Over to you, ma'am.
Yeah. Thank you very much. On behalf of DAM Capital, we would like to thank the management for giving us the opportunity to host the call. and also the participants for being on the call. Thank you very much, sir, and wish you all the very best.
Thank you.
Thank
Thank
you.
you.
Thank you. Ladies and gentlemen, on behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining with us, and you may now disconnect your lines.